So good morning, everyone. I believe we are all making profit. Yesterday was a very good day for us. We took trade on gold, and gold printed massively for us. Then this GJ is also printing massively for us. So very close to take profits. For those of you that took it, you can decide to take your profits now. You must not wait for TP to hit. So mamas give. Thanks for watching. Please tap on your screen, like the live. That is the only thing you want you to do for us. Just your whole work is to keep tapping on your screen. So we thank God we made massive profit yesterday. Gold, I actually closed gold yesterday before taking in going to sleep. I closed gold around this zone, around 3480. Yeah, and it later smashed our take profit. So all the way. So we will explain in today's video. We'll be talking about support and resistance. I will just explain how to identify an important zones. You understand? So as we after explaining it, we'll use it to analyze the trade, especially this gold. Gold is actually making a nice move of coming to a very important zone for us to take. So let's continue. I was actually expecting to sell gold around 3501. Yes, around 3501. But we can see had I took the sell, it would have hit our stop loss because my stop loss will still be within 3508 and this is almost 3509. So let's continue. For those of you that do not know, when you want to analyze a trade, I always tell you, it doesn't matter whether you are taking it a scalping trade or a very high time frame. Once you are about to analyze a trade, first thing you need to do is take your chart to daily time frame. At least have a view on the daily time frame chart. So we are back on our daily time frame. In our video yesterday, we explained about the market ascending triangle, how the market formed an ascending triangle, and we saw how it formed an ascending triangle. Yeah, it's also part of the support and resistance. That one is isometric triangle, but we had a move this way. Yes, this was what we saw yesterday. You understand? So, and I explained it in detail. So if you think or if you are getting it wrong or you are confused, please go to our YouTube channel. You will see the complete video there. Watch it. If you have any question, go to the comment section and ask the question you want to ask. So let's continue. I'm recording the video. It will be uploaded on our YouTube channel. So now, if you're analyzing a trade, you as a trader, when you go to your daily time frame, what do you need to do? Excuse me, guys. Okay, what do you need to do? You need to squeeze in your charts so that you'll be able to be seeing the bigger part of the chart. At least this gold is not actually giving us a good support and resistance to put, but I will just use it to explain. So if you look at this zone now, let me put this line here. If I put this line here, please keep tapping on your screen, like the live, please. If you look at this zone that I just marked out now, you will see that the market actually have been reacting on this level for a long period of time before finally breaking above. So that means this is a resistance zone. Like I always explain to you guys, I want you to view resistance as something that you experience every day. Now you're staying in a house and you're sitting on your bed or you're matching the ground, you're standing on the ground. That ground is serving as a support to you. Yes, it's supporting you from sinking below the ground. You understand? It's serving as a support. Then you look at your roof or your ceiling or your slab. You understand? That's like when you jump up, even if no matter how high you can jump, that ceiling or the slab or anything above you will push you down. It will push you back, acting as a resistance to you, resisting you from going above that level. That means if you bounce a tennis in your room and you keep on bouncing, maybe bounce to the roof, bounce down, bounce to the roof, and keep on bouncing that way, that means the tennis is having an equal and opposite reactions. The way the roof is bouncing it down, the ground is bouncing it up. And if you continue doing that way, that is what we call a range in the market. Yes, it is a range in the market. So it's just ranging there, equal acting on the market until the market decides to break above one side. Now, some of you will be like, okay, how do I know the actual side that the market might break? One of the ways to know the actual side the market will break is first understanding the trend of the market. Was the market coming from a downtrend or it is an uptrend? Maybe the market has been coming from down, going up, shooting up, and suddenly started ranging. That way, sometimes, most of the time, the range signifies a continuation. We call it accumulation of power. When the market is rising from down and going up. So let me explain it this way. When market is moving this way, when market is moving, maybe it came from down and have a massive pump. Then from that pump, you now start seeing this market having a range. It doesn't matter, is it falling wage or rising wage or just a wage. So what happens there is that there is a high possibility we might see just sweep below. This is a liquidity. For those of you that do not know, I have always explained it. All this, you see this place at zero, is they are liquidities. Why do they call it liquidity? Means money in trading. Because liquidity means money, that is why they will say sweep of liquidity. That is sweeping money. That means all these places that you saw a reversal, there is actually money that came into the market to buy it from here. Then money came here to sell. Money pulled out from this zone, selling it. Money came in, buying it. So they have been buying, selling, buying. Then suddenly the market wants to break above. Then it will definitely come back and sweep out the liquidity of all the people around here. Hold on, guys. So as I was saying, it will actually come out and clear the liquidity around this zone before going upside. You understand? Before moving upside. So they'll clear. Remember, what market does most of the time is that when you want to start its movement, it will clear liquidity before it starts a movement. You understand? So it will just clear the people that have been. You notice that a lot of people were waiting for this market to buy from this zone because people are waiting for it to buy. People are pushing money to buy, and you actually want to pump. What it will do is that it will create an illusion for those people standing here, kind of breaking below. These people that was selling, we think that, oh, this market wants to sell now. You will see them putting more entries, even some people jumping in because it don't break below. Then you see the market after sweeping these people. The fearful ones, those people that use tight stop loss, will be kicked out of the market. Then those people that is scared, we just close their market. Then those people that already understand what might happen in the market, we still hold their market. Then the market will jump up again, going to the upside. Then clearing all these people, whether your stop loss is tight, whether it is wide, whether you jump at CMP, whether it did not, whatever, but you are on the sell, the market will kick you out of the market and continue going up. There may be a partial retracement as it was going and continuation again. This is how support and resistance, with the little knowledge of your chart formations and chart patterns, helps you to navigate all these manipulations that might happen in the market. So let's continue with that analysis now. I will now tell you now another way to understand with the possible places that the market might break after a range is you check the way the market has been hitting a particular zone. Like I've always said, the areas that the market hit, the zones that the market hits, the more it hits that particular zone, the more that zone will get weak. You understand? Excuse me, guys. So the more the market hits a particular zone, the more that zone will get weaker. Now let me give you instances and how it works. Now when you bounce a table tennis, remember when you bounce a table tennis, it will be reacting between the ground and the ceiling. Now let's assume the ground is now stronger. Yes, it is going to be stronger. Now the ground acts stronger when maybe the market is coming from uptrend. It was coming from ground going up. We know that we are on an uptrend. The market is supposed to continue buying. Then by then the support zone will be stronger. Why? Because more money pushing the market from support zone. People have been holding it for a long period of time. Will be stronger. We make it stronger than people that is coming in for a sell. So because of that, the more it's hitting the ceiling, the more the ceiling gets weaker. Yes, the more the ceiling, that spot gets weaker until it will continue hitting until it can now break above. Now let me show you. That is the possible places you can check it very well. Is from ascending or descending triangle. Now let's explain it. So now, if this is an ascending triangle as I've explained, now let me explain why those ascending triangle always break above. If it is an ascending, then descending triangle always break below. Now, remember we'll have a line here, our horizontal line. Then we now have our trend line coming for the chart. Then the market will now move. Remember the market has been moving from down, doing all the yama until it now gets to this zone and start ranging upward. As it is ranging upward, did you notice something? The thing you need to notice is that now this upside is continuously hitting a particular zone. But the down part is not hitting the same zone anytime it comes back. Now, let me put this thing this way. Now, if you look at this zone now, you will see that the upside kept on hitting this zone. It kept on hitting this zone, this particular level. And because the more a market hits a particular zone, the more that zone gets weaker. That is how support and resistance works. The more a market hits a particular zone, the more the zone gets weaker. Then, if you look at this one down here, you will discover that the market actually is not hitting the same zone. Now, let me tell you how it's not hitting the same zone. This is a trend line. A trend line is just like a ladder or a slope. Now, if you want to make it the same zone that this one hitting horizontally is hitting, then you need to mark out all the lows, which means you'll be having a hit this way. 1, 2, 3. You can see that all of them are not hitting the same zone. That means it is easier for this one to get weaker before this one will get weak. So it is a higher chance that the market will continue moving upward. That is same applicable to if the market is coming from up, falling. Now it's something like a downtrend this way. The market is coming down, moving downward. After everything, you enter the range and range. Next thing you need to do, you will just see experienced traders. We start looking for a sell. You see they're marking other block and making sure their stop loss is above here. You understand? So they will just enter sell. That is what they will do. They will just enter sell. Then you see some people that have large money, some people that their money is large. You see some of them taking a CMP. Yes, just they already know that whatever that will happen, if it's not manipulation, this market is on a continuation pattern. So that is how all this pattern of a thing works, and how support and resistance helps you to navigate and understand the message the market is sending. Remember, I told you guys that all these charts is like a language. It's now left for you to calm down, understand the language, the message the market is speaking, and how to navigate it. So now, going forward now, as I've said, this daily time frame. On daily time frame, you have marked out your resistance zone. The markets now break above, and you see the markets reacting this way. You can now continue marking it out. Now, let me just use this level, marking it out, and keep going. Let's keep going. Now, some of you now get confused. There are some areas where you get the markets are not on equal level. Yes, sometimes you get to an area, the market is not on an equal level. Now, let me show you the situation, something like this. Market made a high, came down, made something like this, made something like this. Now, on this part, experienced traders can use their trend line to kind of connect the market as it is. You understand? Remember I told you the last hit should always have a touch. But if you want to use your support and resistance in this zone now, if you want to use your support and resistance, excuse me, why is this person disturbing me? So now let's continue. In this kind of situation, let's assume you want to use your support and resistance to check the market. Now, on your support and resistance now, you will now put a support this way. Now, if you put a support this way, you will now, there's some calculations that you need to put in place now. And that calculation is this. When you are plotting a graph, for those of you that did physics in their educational lines, so if you check when you are plotting a graph is this way. Excuse me. Graph is this way. Let me change the color. It is this way. Now this is your graph. Now you now maybe after making some points, okay, let me put some points, dots. After making some points, you have here loaded. Excuse me. Okay, after making some points, you have a point here, you have a point here, you have a point here, you have a point here. I'm coming up with something. Now at this point now, what do you need? Please keep liking the live. At this point now, you kind of need something. You kind of need your slope line. You need to connect the lines together. As you are connecting the lines together, you will just have to. You will need something like this. You will need to connect from this line up to this line. But now there's something they always teach you in physics. That thing they always teach you is that you should make sure that the lines you are connecting is kind of close to all the dots. So that means as you are connecting this line, this dot's supposed to be close to the line, even though the line must not touch all the dots. This dot's supposed to be close to where your slope line is. This one's supposed to be close, this one's supposed to be close, this one, no matter how many it will touch. And the line is expected to touch 2 or 3 points. So how do you now draw this line? If you make this line this way, you will see that this one down is far away and this only one is connecting. If you make it this way now, you will see that this 3, this 1, 2 is far from it. But if you make it this way now, it is as if, okay, they are in the middle. This one is close to it, this one is close to it, this one is also close to it, this one is also close to it. You understand? That is how to run your analysis. And this is how they did it in physics. So now let's go back to our normal analysis. If you go back to your analysis now, excuse me. If you go back to your analysis now, you can now come back and say, okay, at this zone now, we have this height. We will use this height as a point, use this one 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 as a point. The reason I put this line here is that this one and this one is close to it, this one and this one is also close to it. I cannot bring it at the upside. You understand? I cannot bring it here because this one and this one will be far away from it, while this one is closer to it. You understand? So instead, I'll put it in a place where I would look for that point where the market is touching at least 2 points and all other points are closer to it. You understand? That is how you put your support and resistance. Then the next one you now put, if you now decide maybe you go on a lower time frame, that is when a lower time frame will now give you reasons why you should mark out another point here and you mark out another point at this zone. You understand? So by that you don't already make your support and resistance. Then I always advise you, when you make a support and resistance on daily time frame, then if you go to 4 hours time frame, always use another color so that whenever you come to that particular chart and the chart is acting on any support or resistance level, you already know, is it daily time frame support or for lower time frame support. You understand? That is one of the advantages of you having different colors on your support zones. So now let's go back to gold. So now good, now we have been on a daily time frame level. We have been on a daily time frame level. Let's now go to 4 hours time frame. On 4 hours time frame on gold, you can now see that gold has successfully broken above this zone. It has broken above that zone, and we have not seen a perfect retracement. Yeah, you might say this one is a retracement. It's not actually a retracement. Yeah, I don't call it a retracement. It was just the reason I always see this thing as a market breaking a strong zone. It's had a kind of a reaction because it's broke out of a strong zone. After the reaction, a perfect retracement will definitely come in. So what I normally do is, because of that reaction, remember in the previous video, I told you something about a precious candle at the reaction level. So at this reaction on a higher time frame, I'll just mark it out. It will be my POI. I already told you the meaning of POI. So now, point this zone now. I'll go down straight to 4 hours time frame. On my 4 hours time frame now, you can see on my 4 hours time frame now, we can now say, let's see what the market actually did. Now there is a reaction at this zone where the market reversed from before. Now that reaction, I'll put a line so that the line will guide me to know what the market actually did when it got to that zone. You understand? So now I put the reaction. You can now see that this rejection that actually happened was a rejection based on a reaction where the market, that means that place is a resistance zone. Yes, because it's a very strong resistance zone, because the first time the market came to that zone, we had a massive dump. and market never come to that zone again. You understand? Now, so excuse me. Now the markets have come back to that zone, and what are we expecting? A retracement. Now you might ask yourself, why am I not waiting for a retracement at this zone? I am not waiting for a retracement at this zone because it is a very high risk. Market vibrating on a resistance zone, a very strong resistance zone. And this is just a pullback before the market tested the resistance zone. There's a high liquidity, high probability that this market will clear this liquidity, looking for a strong support zone for it to gain momentum to break above this zone. This play does not have the strong energy for this market to pull back from here to go above. You understand? So I'll be going down to 45 minutes time frame. On 45 minutes time frame, we are now seeing areas where we can put out our support and resistance. Now remember, for those of you that don't know, support and resistance, all this break of structure you are hearing, markets are broken in structure. When you mark out your support and resistance and the market break down your support or your resistance zone, it's a break of structure, because support and resistance you marked out is a structure that the market has been respecting. You understand? Where it came and respected it and pulled back wherever, then suddenly the market come there and break it again. That means the market has broken a structure. So those people trading SMC and ICT, they now change the term just to make it look as if it's something special or extraordinary. Instead of making it a break of structure, support and resistance break, they just say break of structure. You understand? So don't always confuse yourself with the terms. Always, just all you need is understand the purpose of the term. You understand? Understand the language, understand the information that the market is sending. So now I'll go to 15 minutes time frame, on 30 minutes time frame, sorry. On 30 minutes time frame, I'll put it on the trend. We had a break of structure at this zone. So what am I expecting? I'm expecting the market to clear this zone. Come down to this zone, this area, and continue its movement. Now remember, when the market opened yesterday, when you opened on Monday, I told you guys that this market have a high possibility of coming as low as this level. You understand? To retrace before going higher. Then the market did not actually retrace. Instead, it decided to go and clear the path. So now let's continue. Now, in this situation now, on 30 minutes time frame, we might see a move this way. Sorry for the delay. We might see a move this way. From here, having a drop to this zone, showing a retracement to this high, then dumping, then continuation. This is the possible zones, the possible movements we are expecting from the market. So now, with this thing now, we will still go as low as 15 minutes time frame to know a possible thing. On 15 minutes time frame, we are not seeing anything extraordinary than to readjust our entry. So now, after readjusting it, it is now aligning with our previous resistance level that turned to a support. That means it's coming back to retrace to that zone. Then we'll now go again, go to 5 minutes time frame. On 5 minutes time frame, we can now say, okay, at this zone, we can scalp a buy. We can take a buy for a scalp. Now, when you take a buy for a scalp, in your back of your head, you will know that, oh, this is actually a risk I'm taking because this place is not a perfect zone for this market to reverse from. But because you want just to scalp and scalping it to this left shoulder or scalping it to a place, this zone, that is just what you need. By then, you will just do a proper calculation of where your stop loss will possibly be. From here to here, this is 0.19. You understand? So you can say, okay, you adjust it, or you go to a lower time frame to look for a perfect entry. You understand? So remember what I always tell you, we have a lot of reactions here. When I have this kind of situation, what I normally do is that I kind of pick the place that the market had a very high momentum to pump. So this zone, I put this line, is where I'm expecting to take my buy. And if you don't understand what I just did there, whenever you mark out a perfect order block, you will notice that 50% of, if you go to 50% of that order block, there is a massive reaction that happened there, and that is see the 50% of my order block. See the reaction here, and I marked out the reaction. Most time I don't check 50%. Once I see the movement, I already know, oh, this is reacting from 50%. You understand? So now I'll be going to 3 minutes time frame. Now I'm leaving my focus from this one down because this one down is the higher time frame order block that I'll be waiting for the market to come. I'll now focus on this scalping level. On this scalping level, I'm looking for a perfect area for me to go in for a buy for this market. So I will put out my distance here. For those of you that still get it wrong, if I mark it this 50%, this 50% just slightly be above it. There is 50%. So that is what I will be expecting from this market. Then I'll change it to a candlestick to see the liquidity levels that the market's marked out. Then I'll mark out this my liquidity level so that I'll make sure that my stop loss covers it. So I'll now place my trade. And wait for it to come out and play. Out. So this is what I am expecting from this market. Then this one now can come back to retrace this zone. I'll put another line at this my break of structure zones. So these are the two levels I'll be expecting this market to play from, and that is how I'll be taking my trade. So I'm expecting a move, bam, a dump to this zone, a move to here to dump, or here before dumping, or you can decide to break above. So thank you guys for watching. I believe you understand it clearly. The reason I just use a chart to analyze support and resistance and kind of explain structures is because if you are seeing me analyzing a trade that I'm taking the same way I have been teaching you, it will help you to understand the things I look at and things I neglect. You understand? For those of you that do not know, when you're marking a support and resistance, just know that you see all these reactions here. All these things are noise. You understand? Don't take it. The complete movement of this, all these things is complete movement for this. So you don't mark out all this one differently. It is marked out on a low time frame just to mark out a reversion pattern. But in the higher time frame, they are one move, just like this one now. I don't mark out this level. Instead, I mark out complete move this way, pull back, come up now, pull back. So if I'm to mark out the way this market moved, I'll just mark it out this way. You understand? So these ones now, all of them is one body. You understand? They are one body, just a noise that tries to keep your mind off a particular zone. So thank you guys for watching. Follow, like, share with your friends. We pray to grow together. Thank you guys. Have a nice day.